No panicking, no panicking, the worry they end today. Tizeti na the packaging, it cover you all the way. Whether na e-learning, yo, whether na business, yo. Working is digital, working from home, you covered with Tizeti, yo. Streaming and surfing, Tizeti. Gaming and chatting, calling unlimited. I'm living the life cause I get Tizeti, yo. Yes, sir. Tizeti, connected. I'm living the life cause I get Tizeti. Yes, sir.
Hello, everybody. So you're welcome. My name is Frank Elia. I'm the head of technology for Business Day. Today, I'm talking to, I should be talking to about two people, but we're still expecting the second speaker. My speaker right now is Kendall Ananyi. And he's the founder of Tizeti Networks, which operates as Wi-Fi.com. He has a master's in electrical and computer engineering from the University of Victoria, Canada, and a bachelor's degree in electrical electronics engineering from the University of Benin, and over 17 years experience in telecommunication and information technology. Kendall has worked with two AA companies, ExxonMobil and Microsoft, as well as a Big Four firm, PricewaterhouseCoopers. Wi-Fi.com.ng is an internet provider operating in Africa that is leveraging wireless large bandwidth and plummeting cost of solar panels to create a low capex, OPEX network of owned and operated towers to offer disruptive customer-friendly pricing for unlimited internet. You're welcome, Kendall. Hope you can hear me.
Yes, I can.
All right. So we're just going to delve into time. We just have a few time to spend on this. But let me ask you the first question, which is, you're like a serial entrepreneur. You've been there, a management consultant, you're a researcher, financial risk and derivatives software developer, engineer, seed investor, and now CEO of Tizeti, a broadband internet service provider, which I have used myself. Your experience goes across sectors and organizations at different stages of growth, size, and capital. The question is, why is scale so elusive for most startups? Is it one of those hard things about being a founder or an entrepreneur?
Okay, so yes, so just like you said, some startups, some have gotten to scale, right? We just got a startup that's going to become a unicorn, right? But majority of startups either fail or do not reach that huge scale that we're looking at. I think generally the first thing I will talk about is capital too, access to capital. So there's not as much capital in the past flowing into the continent, but that has changed over the last 18 months. And we've seen a steady exponential increase in the amount of capital and even venture funds focused on investing in Africa. So but it takes a while between when you deploy capital and when you start seeing the rewards. It takes about 4 to 5 years for you to get to that level of scale. So what you're seeing now would manifest in 3 to 4 years at the minimum. And then even when you get the capital, how you can efficiently deploy the capital, because there's a lot of infrastructure deficit in Africa. So part of the capital that you're raising, you would use it to do other things that you typically will not do in the developed parts of the world. For example, for me as an internet provider, I have to build my own infrastructure versus a new internet provider somewhere in the developed world would have to just leverage existing shared infrastructure, right? Then the market itself too, it's at the major cities, yes, you have people with a lot of disposable income. But by the time you leave the tier 1 cities in Africa, you have tier 2 and tier 3. All of a sudden, that product that you started off, or service that you started off delivering in the tier one market, you have to adapt it for the market because you're now going into a place where they're more cost sensitive, and that's the majority of the market in Africa. Then third thing would be starting off with a local focus, but you not a lot of startups have reached that scale where they're Pan-African. So you start off your business, you've done a few years in it, but you're focused on your local market. The quicker you can get to where you're now building across multiple markets, the more all of a sudden that you can access a lot larger market and then grow to scale. Then we also, even though we don't talk about it a lot, there's a little bit of language barrier around the continent. So there's an English speaking, just even like focusing on West Africa, there's English speaking West Africa, and there's French speaking West Africa. So if you deliver the service or the product that is just tailored to English speaking, you need to be able to cross that language barrier and also be able to tap into the French speaking parts of Africa, and also go beyond just the region itself, beyond West Africa. So if you're not able to do that very quickly, you won't get to scale. Then fourth thing will be M&A. M&A needs to start happening. That's mergers and acquisition. We have a number of startups, multiple startups working in the same area. Some are doing very well, some are not doing as great. Some are, even though they are not doing as great, they are maybe good at some particular vertical, right? So what usually happen outside of Africa will be investors will try to bring these businesses that have synergies together, but not a lot of that has happened in Africa. And the thing is, when you sum the total of these two businesses, maybe via an acquisition or merging the two of them together, you get a larger business that can potentially scale a lot more. Then founders too, we need to find entrepreneurs that are taking risks, but we need to also be bold. So one thing is taking the risk of being an entrepreneur, but another thing is being bold, which is actually go for it, right? Then I know this one has been reflogged by everybody, even the last panel, human capital too. If I asked, if I wanted to hire someone that had scaled telecoms business across Africa, there are very few people. They'll be working in the large telcos. And it'll take a lot for them to come work for you. So you have to improvise, as the case may be. And that's obviously facing, other startups are also facing that in terms of looking at developers and all of that. So those are the points that I think have prevented a lot of scale, but that will change over time. Okay, thank you.
Okay, so let's look at the funding aspect of it. Over the years, we've had early stage investors like Y Combinators in startups in Nigeria. Tizeti was a part of Y Combinator. You had Baystark, you have Cowrywise, and quite a number of startups have gone through and Y Combinator and the likes of it. What's your view of the role that accelerators like Y Combinator play in terms of helping early stage startups grow? What's your view? And what was your why you were there?
Oh, okay. Very great experience. Best thing that ever happened to us, because we had tried to obviously we bootstrapped our business, and we're at a point where there's so much you can do with bootstrapping where it's starting to affect your growth and you want additional funding into the business. But getting to YC was pitched as, oh, additional capital. But in actually going through the program is a lot more than that. First of all, you come in a batch, which means you have this support group within your network. I think our batch, we're about 5 companies in that batch, and within the founders, we're really closely knit. And there's this healthy competition and also sharing within that, and then opening up of network. So you now have 5 companies that each person's network within the continent, you're able to leverage that. And just even if you're thinking of just those 5 companies, and when you think about the alumni network, Y Combinator has, all of a sudden you have, if there's anything you want to do, there's people you can reach out to very quickly. Then even within YC, within the 3 months there, every week we have these weekly dinners where founders in Silicon Valley come to talk to us and share experience. So it's similar to what you're doing with the Founders Fund, but think of it at a higher frequency, like every week. So, and these are people that you've seen on Twitter, you've heard them talk, all of a sudden they are right there in the same space with you. And you have the ability to actually walk up to them after the dinners to actually share the experience. And they're very candid, share the real experience. It also helps you understand that, well, okay, all of a sudden I can actually be that person if I do the right thing. Then they take you through other things like team building, hiring the best people, which is very, very important. Do things that don't scale. One of the things we got out of YC was we're able to figure out that people can pay for internet even without seeing it. So where we were normally charging before, we've now figured out that we can get people to pre-sign up. That's not something that you would normally think. And then they teach you thing about growth. Growth is very important. Every week you have to report your progress, right? And if you don't measure anything, you can't see the impact. So you're watching your growth, you're seeing yourself grow up and to the right. There's a session on marketing too. And also ultimately preparation for demo day, which carries you throughout your post demo day, because they teach you tips on how to fundraise. And back then we raised $2 million out of after demo day, which was at that time was one of the largest announced seed rounds, right? And this happened in a space of 2-3 weeks, so we went from not raising, having one term sheet in Nigeria for $1 million to raising $2 million in about 3 weeks. So the impact, as you can tell, is a lot, and this has carried through more the modern past our seed round.
Just to follow up on that train of thought, is given that Y Combinator can only just take just the size of Nigerian startup that they can take, and Nigeria has the largest tech startups in Africa. Given that the Y Combinator would not have to take all of them, do you think it's a disadvantage that we don't have local investors plugged in the early stage like we have, say, in markets like in the US? And we're also beginning to see Egypt and some other African countries begin to build up their local investors network. Do you think it's a disadvantage?
So 5 years ago, 2016, 2017, 4 years ago, that was relevant, but now that has changed. You've seen development finance institutions fund funds that are focused on Africa. There are folks like Patek that Africa. There's even on the early stages Ventures platform, which also is an investor in Tizeti. There's Ingressive Fund, which is also an investor in Tizeti. So as far as I'm concerned, the seed stage is the best it's ever been. There's no difference really if you have a great business, getting funding, you can raise a seed round the same way we raised the seed round in 2-3 weeks, very quickly. It's even now very competitive. What you would see now is investors grumbling a little bit that there's a lot of competition to get allocation. So that seed state has changed, but what hasn't changed is the around the B, Series B and upwards. That's where it's still a little competitive and still challenging. But if you look at the trend, that would also get better over time. So the DFIs are doing what they are doing. They're creating the fund. There's one new fund announced almost every other week. I just saw one. Just raised 100 million and it closed. So hey, there are a lot of funds. This is the best time to start a business ever in tech.
Okay. What I wanted to also ask you is, you are an entrepreneur and as well as also an investor. And one of the companies that you invested in, Flutterwave, became a unicorn. Then you also invested in Paystack, which was also bought by Stripe. What did you see in the early stage of these companies that made you invest?
So Paystack one was a case of, I had a challenge, which was my business being a subscription model. We wanted to, the incumbents at that time wasn't really working for us. We wanted something that could do recurring billing. And then when Paystack launched, I got introduced and we integrated with Paystack. We loved it. And that was the same thing we're seeing around all the early customers. The early customers really liked them. This was without any kind of marketing. So I don't think anybody, up until they did a billboard a few years ago, you would not see anybody advertise about Paystack, but you could see on Twitter, on Radar, Tech About Radar, that a lot of people just kept giving rave reviews. So for on my own part, that was one aspect. I was okay. There's building a community of developers that love them. But even on the product side, on the adoption side, we saw that our users started making a lot of payments, and our payments were growing exponentially. And for me, I said, well, this company is going to be a very big company. We didn't think about it the way people think about investment. Oh, I didn't think about it the way people think about investment, which is going to be a huge exit. I just came from a point of, I love the product that we're offering, and a lot of people love it. And for me, I was like, okay, this is an opportunity. I know the founder. Let me support as best as I can with the funds I had at that time. I was still working in Exxon then, and 5 years down the road, they sold for $200 million. Same thing if if you had told me that I would have even been this soon, I would not have guessed. So yes, it was huge. Then on Florida Wave's own was right after I invested in Playstack, a few months down the road, I wanted to introduce Providence Bank to folks in the ecosystem. So I took them down to CC Hub, and just before the meeting, I had written to a number of founders saying, "Hey, I'm coming to Yaba. There's this bank that is going to be focused and want to work with a lot with startups. Is anybody interested?" So I'd emailed one of the founders of Florida Wave, and he was not. I didn't even know anything about Florida Wave. So he just left his former startup, which was Andela, and he said, "Oh, I'm working on something new. By the way, we'll talk about this, so I can meet up with you guys." And then for me, I was like, okay, he's working on something new. That means he's a second-time founder. The first one did very well. Probably it's something interesting. And I set up a meeting with him, and he talked about Florida Wave, which is similar to what Paystack was doing. And so for me, it was a case of most people were trying to decide which one to invest in. I was like, why am I trying to do? I believe this market is huge. There's always multiple people that can do the same thing and win equally. And I then also put in a small investment in Florida Wave, and both companies have done really well. But what was similar about them is they were going after a market when an infrastructure business just like mine, which is they were building payments infrastructure. So they were not an application, because usually most of the startups you're now seeing are now applying some of all of these tools. But at the foundational step, they were infrastructure business, which was what I liked them for. And they also there's this huge market that they were trying to tap, which again, if you have a huge market, you can build a really big business out of it. And then over time, I also saw them move past just not being a Nigerian business and being a Pan-African business, which are some of the things that you should look out to when investing. I think one of my regrets is not even continuing to invest as they grow alongside, but because I was now focused on my own startup.
Okay. So let me pause you there and introduce our second speaker. That's Obinna Ekeze. Obinna is a retired professional basketball professional, one of the early Nigerians to break into the American NBA. A serial entrepreneur, he pioneered Nigeria's first digital travel platform, Wakanow. Beyond Wakanow, he has gone on to co-found Transbox Technologies, a company based in Nigeria. He has also founded recently OBN, Basketball Academy. Transbox Technologies utilizes a large network of software engineers to provide IT solutions throughout Africa. The business specializes in developing artificial intelligence-based platforms for hospitality, insurance, and financial institutions. And like I said, he recently unveiled a new company called OBN. I think it's a foundation. Am I right, Mr. Obinna?
Oh, thank you, Doc. Can you hear me?
Yes, I can hear you perfectly.
Okay. Yeah, thank you very much. It's an academy to build a foundation academy. Like you said, it used to be a former basketball player.
Yeah.
It's a huge fan of just like everything else in there, we have a huge potential for talent in Nigeria, but no one has really, invested in the infrastructure required to develop this talent at the local level.
Yes.
Most of us that played basketball, we were fortunate to go to the United States to play. We had to develop most our skills when we got to the United States, and I think that if we're able to start at a much younger age, we will be much more talent developed as our skills by the time we get to the United States. So the plan here is to start these kids at a very young age, from the age of 6 to 18, and then by the time they get to that university level, they will be able to earn a scholarship from some of the top universities in America, which is what I was able to do. I studied mechanical engineering and business on a full basketball scholarship at the University of Maryland. So, and then from then on, I was drafted to the NBA. So it's really a huge opportunity we have, and with the whole Nigerian economy, the net population of Nigeria has mostly made up of young people. It's high time we really start investing in development of our young people. I'm really proud of the fact that the music industry has done very well in creating the entertainment industry, but I think there's a huge gap in the sports development industry, and that's the area I want to play in.
Okay. one familiar thread in most of the businesses that you've founded and gone out to run is that they usually scale, sometimes early, but there's just been this familiar thing about them scaling and all that. How are you able to achieve that? Achieve network economies in such a short space of time?
Well, I truly believe in the use of technology in everything that we're doing. Technology plays a huge role in being able to scale faster. Everything I do always involve technology. So if you're talking about the company which I founded, Wakana, we're really the first company to really invest heavily in technology. We worked on developing payment and gateway, completing the payment gateway. Interswitch. At the time we started, Interswitch is a very, very young company. I think we're probably the first company that actually worked on completed their online payment gateway for them with WebPay. And so we're talking about 2007, 2008 here. So there was really nothing on ground at that time. So we really worked on the payments system, the banking system. So we did the whole ecosystem of what we needed to be able to drive sales online. So a lot of the work we did initially was really to build the infrastructure, whether we did it ourselves or do it with partners. And obviously we did a lot of work in terms of contracting with the partners, the airlines, the hotels, and the rest of them. So we did a whole ton of heavy lifting in the beginning, and that's by the time all of this infrastructure was built. Then obviously we were able to do quite a bit of work in terms of digital marketing, and then obviously demand is there. When you talk about a huge market like Nigeria, comes to travel, we're able to offer customers really good deals and use technology to do stuff like packaging and stuff like that, and it helps build business very fast.
Oh, okay. My second question is, looking at valuation, you'll agree with me that we've come a long way, say in the tech industry and in every other startup industry that we have out there, from when investors used to come one by one to now, when we now have investors coming like every month. In 2019, Nigerian tech startups sort of swept off the whole carpet on funding. We've seen it starting to repeat itself, say in 2021 and all that. Do you think that that this is a trend that's going to continue, or do you think it's a one-off event? Is this going to be a bubble or something?
Well, I think if you ask me, I think the opportunity is there. I think for a lot of the tech companies, I think there were some really good deals that happened last year with Paystack, and I know recently now with Flutterwave. I mean, these are huge. These are really infrastructure businesses, and those are huge. I think those are great businesses because they actually have the opportunity to scale their business even beyond the borders of Nigeria. And if you're talking about the Pan-African opportunity. One of my biggest regrets was not investing in those companies because some of those guys some of you actually approached me early in the early stage, and I just was so focused on Wakana at that time, was so busy. But those companies have done tremendously well. But there are definitely opportunities in Nigeria to invest in the tech space. I think that Nigeria is such a huge market. And you look at Nigeria's position in Africa, you can't neglect Nigeria. So when you talk about technology, there's definitely huge opportunities. But obviously, you have to take it and in single. The opportunities that each companies of those companies, and then their actual scalability, and then who's managing them, basically who are the founders managing them. I always believe that there's always a huge be more importance given to who the founders are and how they can scale that business, because it just seems like sometimes people underestimate the power of a founder and when creating that vision, and I think it's extremely important.
Over to you, I'm Kendall. I find it often difficult to maybe try to explain why Nigerian tech startups are becoming the major attraction for investors. So we've had a Paystack bought over by Stripe. We've had Flutterwave, but then also there's a recent report that showed tech ecosystems in Africa. Nigeria wasn't among them. Nigeria wasn't among the top 5. Nigeria was like 6th. So, but even though we have the largest number, why do you think we continue to attract a lot of investment in Nigeria? Yes, Obina has said that we are a large market, so investors cannot afford to ignore it. But is there another thing that makes us that attractive? I've asked some founders who said maybe the Paystack exit sort of is also driving what is happening now. What do you think is responsible for all the investment coming into the Nigerian ecosystem?
So markets, you can't dispute. Markets is one of the things. 200 million people at least. Anything you want to sell, even if it's $1 that you're getting from everybody once a month, that's $200 million in revenue for any business that can get to that still. So markets is number one. But I think also exits help, right? So they've seen the story start to end, right? It's one thing to invest in companies which other people have done in the past, but it's another thing to see a huge return on investment from those that took those risks early on. And the fact that, yes, we also have, if you're saying Africa has the longest has the world's youngest population and 2 billion people, and Nigeria is 200 million of that 10%. So Nigeria's market also has one of the world country with one of the youngest population too. So most of the services that are related to tech can actually, you have the market for people that can, you can provide that service to. And then from the founders too, by Nigeria, by how difficult it is to execute. Once you've executed in Nigeria and you're a breakout star in Nigeria, the rest of it is just straightforward. It's like a walk in the park. I'm not saying that other countries are easy to execute, but if I compare my experience starting up in Nigeria and Ghana Wi-Fi in Ghana, it's like it's way easier. There's power in Ghana, so you don't have to deal with building power infrastructure every time you're building a tower. And so all of a sudden, the things you did in Nigeria, you can actually grow really fast once you're outside of Nigeria. You tackle the most difficult market, the most competitive market in everything you're doing. So that way, you as a founder, you're building grit, and those are the things that are required to be bold to be able to build a big business.
Okay, to you, Obi, what as a founder gives you a sleepless night in Nigeria as an operating as a founder in Nigeria? You've got you had Waka Now, and then you had Transbox, and then you now have OBN. What gives you sleepless nights in as a founder in Nigeria?
Well, I think two things I would say. Just the infrastructure deficiency in Nigeria is very challenging. There's a huge issue now with power, and especially for a startup company, it's very difficult to break that. Actually, the cost associated with power is very telling in new business. Then you have to talk about human resources. And you find the right people, is always challenging, and getting the right, person for the position. It just seems like now I'm not saying generalizing everybody, but it just seems like the younger people now just, everybody's looking for getting money or getting paid without really giving much value. And that is some of the biggest challenges any entrepreneur is going to face. Now, how do you find people that have passion to just give value and improve, and also who are fully dedicated to the role that they claim that they can perform, and that is some of the challenges that I think that are very difficult for an entrepreneur now. Maybe Ken can talk about his own, but I think my own is just there are two things. Obviously, you talk about financing and those kind of things like that, but you just have to decide, what kind of financing you want to take, or you want. But my company, so what at this stage, my journey, what I achieve, and how I forward. But I think the other things earlier issues I mentioned are the paramount issues we have now.
Okay. To you, Ken, I think he has mentioned infrastructure, and I think I want to take it up from there, which is that you are a Wi-Fi company. You provide Wi-Fi services to your customers, and since last year, we've seen the federal government try to push right of way so that fiber cables can be deployed across Nigeria, so that we can have more broadband accessible to everyone. But we've only had about, say, 6 states come out and say, we're going to reduce it, But then you are a service provider, you are an operator in this industry. How does these little, should I call them little, or should I say these regulatory bottlenecks affect you as a business, as an operator in this industry, in deploying infrastructure, I meant to say?
So telecoms is what I'll call mature. They've been around for 20 years. So in terms of regulations are really well spelled out. A small provider like me can easily get the permits required, licenses required, spectrum required to operate your business. And the moves that you said the government has made with right of way is really, again, there's always never a good time to start on something, but it's always also good because if you look at what has happened in the last 1 year with people working from home, the internet requirement has skyrocketed over time. I remember us celebrating at the beginning of last year, doing 100,000 gigs a day. But 6 months later, we're doing 150. So it took us how many years from inception to get to 100 and to already grow by 50% to get to 150,000. So we're at the position where we had to carry out significant upgrades in the middle of the pandemic. Like we had to go from 1 gig to 10 gigs infrastructure. So all of this fiber that is being built is really helping. We're hoping to be able to get to fiber to all of our towers because that would improve the quality of the service over significantly, dramatically. And then just to piggyback on infrastructure, right? Infrastructure is capital intensive, and we all agree that capital is a big problem. But for me, I've been able to build our business where we've minimized FX risk. But even as much as we've tried to minimize it, if you're going to grow as most businesses in Nigeria, right? You're going to import equipment. So all of a sudden, the FX risk still comes to meet you at that point in time where you're growing. So if I'm going to grow by double the number of customers, all of a sudden I have to source double the amount of FX when my revenue is in Nigeria, is in Naira, right? And then you also deal with, I'm trying to raise capital, debt financing, because I'm in infrastructure business, I have to decide between raising in foreign currency, which obviously has killed all the people that came before me that tried to do that, and then raising in local currency, which has been very good in the last 6 to 8 months when rates went down significantly. But rates have started to go down. But I believe that I would love the rates to still be low, so that local businesses that need access to working capital from the market locally can actually access it instead of looking at the easier route, which is going to lend, get debt, foreign debt, which, trust me, there are too many horror stories of people that once the rate moves against you and your revenue, so the rate can move against you 15% and your revenue didn't grow 15% of your revenue, all of a sudden you're in a worse position through nothing that has to do with you or your execution or your team. It's just forces that you can't control, right? So that's really just, I know he had asked what keeps you up at night. I just hope the FX rate just stays around where it is now for at least a year or two, so that we can grow past, we can continue to grow and be in a better position and financially healthier position as a business.
Okay, so Obi, I think this will be my last question because of the time. How important is collaboration to a founder? You've practically grown most of your businesses on collaboration, and just how important is that to a founder? And is there a place to draw the line and say, no, we're not going to, as in collaborate here, we're just going to run it on our own? Just how important it is, and where is the line when you're making business decisions?
Yeah, so collaboration is extremely important, especially when you're trying to grow the business. But you have to pick the partners you want to collaborate with very carefully. usually, and people always say, can competing brands collaborate, or can you collaborate with, which kind of people can you collaborate with? I always think that you have to collaborate with people that you can help grow their business, and also they can help grow your business. So those are the most important things when you talk about collaboration. For now, like if you look at our business now I'm focused on sports, on basketball actually. There are some collaborations out there that I think that are very, very important, that we can, we can both help both our organization and the other organization grow. So it's very, very important, but it's very, very important you pick your right partners and you like people that you want to collaborate with. So it's very, very important. And to be quite honest, it also saves money in terms of things like marketing, because a lot of people ask, well, how do you spend so much money on marketing and all that kind of stuff? But if you have a partner that has a database of, a significant database, and then you have a significant product or some service that they can get, if they use your own service, and you guys can exchange those kind of things, those kind of deals usually work out very well. But you have to make sure it's a win-win. The other party has to get value, and you also have to get value. So as long as both parties are getting value, is something that can be sustainable. So it's definitely very important. But like I said, all these factors have to be taken into consideration, and and those agreements have to be put in place.
Okay, Kendall, my last question is: we have seen two unicorns in Nigeria. We've seen InterSwitch, we've seen a Flutterwave, and each of them didn't go through the IPO route. Each of them were through investments, So is this a trend that we're going to keep seeing, or are we going to eventually start seeing IPOs, say on the Nigerian Stock Exchange, or maybe them going to London or US Stock Exchange?
Before them, we can add Jumia. I know I don't want to get into whether it's African or not, but you can add Jumia. They went through the IPO route. But both routes will take you towards $1 billion investment, being $1 billion company. I think for me, it's really internal to the company where they see themselves, whether they're ready to test the public markets, because the public markets is different. If you look at Jumia's experience, immediately they went out there, short sellers went after them, published a report, and over time they recovered from it. But if you don't have your act together with you as being a public company, all of your information is out there. You have to be sure that quarter after quarter, you're able to have consistent growth. If you're still figuring out other aspects of your business, you can't actually go public yet. So I think it's a case of, as our businesses mature and people feel that they are ready to actually go through with the additional scrutiny to become a public company, that's also very good. And there's also positive sides to being a public company. You can raise additional capital whenever you need from retail investors. All of a sudden, you're moving away from just private and institutional investors to anybody can buy your company stock. But there's additional regulatory overheads that are required with it. Even going public, the cost of going public, at least $1 million in expense in that year. So you want to be sure that you've reached the point where you can actually meet the expectations of what it requires to be a public company. We'll see a lot of them. I know I've talked to a lot of some of the ones I've invested in, Kuda Bank, and there are folks that have those ambitions, like they want to build really large businesses, and it's just a matter of time. So I'm saying, if I'm going to be quoted, I'm saying in 5 years there will be a huge Nigerian founded company that would go public in any of the major markets. And yes, my advice to everyone, if you're listening to me today, is try to make an angel investment, one at least a year. I was lucky to have done that early on in some of those companies, right? And businesses need capital. So I know as an individual, you have different things you're investing in, treasury bills and all of that, but try to support one tech company every year. You'll be surprised that the return on one of them would even outpass all the investments you've made over the number of years when it happens, because it's happening, it takes time. I know this was one of the things I put around me when I tried to make the decision to leave ExxonMobil to become a full-time entrepreneur. I just told myself that, hey, even if this doesn't work out, maybe one of my investments will work out. So and then right place, right time. And so, yeah, that's my advice to everyone. Because it's going to happen.
Okay, thank you very much, gentlemen.